Hey guys, here with Will Gomez today and myself, Alfredo Madrid. We're kind of wanted to touch base with you guys on a weekly basis and go over where the market is, where rates are. We've had so much movement in the last week, not only on the rates and the market, but just everywhere.
Yes.
So what are you seeing out there right now, Will, as far as like what's moving, what's making the market move right now?
Man, I think the election had a lot of people kind of, kind of afraid of like the unknown, right?
Right.
It's crazy that I had a lot of buyers that were saying, I want to wait until the election is over to buy. And literally the day after the election, I had about 3 people call me and say, okay, hey, I think we're back on the hunt. And I was just, my mind is pretty blown on that because like,
what did they expect to change? Like what did they expect to be different, right?
And we live in Oklahoma, so it's a pretty red state.
Yeah.
So I don't know, maybe they thought that if Kamala won, maybe they thought that like prices were gonna crash or something. Man, I couldn't tell you. Like it's like people don't know what they don't know, right? On our end, I think if you and I were buying, like I don't think that would be a deciding factor.
No, and I will be honest though. I've never really been that invested into an election, but this one just seemed a lot heavier than the ones before. I don't know what it was about it. I usually try to stay away from the news and political channels and all that. And this time I was actually like listening to all these podcasts and stuff to try to get as informed as possible. But no matter what side you were on, there's no doubt that this had an effect on the market. I mean, on top of that, the Feds dropped the rate by 25 basis points last week just to tack onto it. Can you answer this? This is weird. This is really confusing. The Feds drop rates and everybody assumed that rates drop. Why don't they drop?
Do you remember whenever it was COVID times and the Feds dropped the rates down to 0% and people were calling and saying like, hey, rates are 0%,
yeah,
right?
Lend me some free money.
Yes. So people don't understand that first of all, that is pretty much the rate that they're putting on the money that they're lending to the banks.
Yeah.
First of all, that's one thing. The second thing is the Fed cutting rates. You're looking at that having more of an effect on shorter term loans. So you have credit cards, you have auto loans, you have money markets. So I know that a lot of us have been, taking advantage of those CDs that they have and that they're giving you 5-6%. That's going to be going down a lot faster as those rates for the interest rates are going down. Now, when you're looking at mortgage rates, inflation is truly what's going to drive that down. So that's why whenever the Feds cut rates, it's not directly impacting mortgage rates.
Yeah, I think ultimately what's really hard to understand here is that when Fed cuts rates, it boosts the economy. And when the economy is boosted, people are a little bit willing to take a little bit more risk on like stocks. Well, if people are buying up more stocks, they're not buying up bonds. Okay? And if bonds aren't being bought, then that's when rates start going up because they're now trying to make the bonds more attractive or the yield's going up, right? So the yield went up to almost 4.41 last week, something like that.
I think so, yeah.
And so that's, as the economy goes up, as people are wanting to get away from buying bonds, they need to be more attractive, and that's what happens. The other thing that does it is when we're starting to see volatility economically or just even globally, right? Like when a president's about to change, people are getting less risk, right? So they're buying up more bonds, which is that in turn raising up the rates, right? So it's really tough to understand how that works. It's kind of weird being in our shoes, though. We're not hoping that the jobs report comes back bad. We're not really hoping that, but when it does, rates do come down. So you do find yourself sometimes looking at the silver lining. Yeah. And that's what's happened to recently, right? We've seen jobs reports come back not so great, which drop rates. But then you got the counter offset with Trump winning, which leads people to be a little bit more bullish in the market. And that's raising rates back up. So that's what's really kept these rates level up high there. But what are your thoughts without having to make too much of a prediction of what rates are going to do in the next couple months?
Man, I think that they're going to come back down. And I think the reason for that is because inflation just keeps kind of going down. This week we have 2 inflation reports, CPE and CPI on that. And I'm excited to kind of see where those come back at because that's really the only thing that they can't really mess with. And I say that with, like, you're talking about jobs reports, and even in those times where it hurts us in the mortgage rates where the jobs reports comes in higher, they always revise it, and then they're like, oh, just kidding, we didn't have 400,000 jobs. We only had 200,000, and it's like, well, that already killed us in the market, right? So I think that now that the election's over, and as you kind of pointed out of a video that you watched, which kind of makes perfect sense now that the market was getting ready for Trump to win. As you remember last time, 2016, nobody was expecting Trump to win, and as soon as he was the elect, rates skyrocketed. Yep. So I think that the market was kind of getting ready for that, and as you mentioned there, and I think that there's only room but to go down now. Not like 2s and 3s like we were seeing back in the day, but I think that we could maybe see like high 5s next year.
Awesome. I totally agree with that, and that's our time for today. We'll see you next week.